Hi, it's Mr. G here again, and today we're going to be going through the HST or Harmonized Sales Tax. And so this is a continuation of 6.3 where we are going through all the different taxes. So HST is a value-added tax, exactly like GST. So if you watch the video on GST, you really understand already HST. The only thing that you have to understand about the HST is that it is basically the PST and GST combined together. Okay, so the government receives its money at each stage in the production in a value-added tax as a value is added to the product, and so that's the same with GST. Ultimately, only the final user pays the HST, and we'll show how that works. So here we have an example. It's similar to the example if you've watched the one for GST. It's pretty much the same numbers. The only thing, of course, is different is HST is about 13%. It will vary province to province because it includes PST as well as GST. So if you look at the numbers, what happens? Well, the first person here, he has to collect $6.50. The next person, $10.40, $29.25, and $52. So as they charge more, they have to collect this amount. But like with GST, what do we have? Well, they can get a refund for the amount that they paid. So this person paid $6.50 already in the amount of HST in this case. So they get a refund, $10.40 minus $6.50. So they're only remitting $3.90 to the government. In this particular case, $29.25 minus $10.40, and we're at $18.85. That has to be sent to the government. Here, 52 minus this, and we're at 22.75. So you can see what happens. They get a credit for the amount of tax that they actually paid. If you look at the bottom and you add up all the net amount, it will equal this amount right here. So the 52 and the 52. So ultimately, the customer is paying it. Now, the difference between the GST and PST system is the fact that with the GST, PST, you wouldn't be paying PST in all these amounts. Okay? Remember, PST you don't have a recoverable for, but you wouldn't be paying PST in all these amounts. You'd only be paying PST at this point. With which an HST system, of course, now you're paying the higher percentage. However, you are getting a refund for it. So ultimately, as far as the business is concerned, yes, they're paying more out initially, but when they do their remittance, everything else, it all equals out. They're not paying anymore. Okay, so that is some of the key differences to understand in those systems. So sales in the HST system, HST is added to the customer's invoice, collected from the customer, and remitted to the government. With a few exceptions, HST covers the sale of all goods, not just those sold by retailers to consumers. If you remember with PST, it didn't apply to service. Well, HST, which includes PST and GST, it does apply to all goods and services. So there are some distinctions that basically can happen, but there are certain exceptions, and we're not going to be going into all the different kinds of rules and other things because certain things would be applicable with HST and certain things won't. Okay? And so, like I said, it covers all services. And so that's a key difference to understand. As a consumer, we don't typically pay PST on services. We would just pay GST. But if we had HST, we would have to pay the 13% then on the service, which is what people often don't like about it. So purchases in the HST, all businesses are entitled to recover the HST they're charged by their supplier. This is the benefit of the HST system. If you remember with PST, what happens? It's added as a cost. So it makes things more expensive for the businesses. For businesses, though, under the HST system, they don't essentially pay the tax because they can get a refund for everything. So this is an advantage. And the governments often say, well, if the businesses get it cheaper, the savings will be passed on to the consumer. So that's where they're like, it will be the advantage of everyone in this kind of a system. And there's always the pros and cons, and there's a lot of debates about that, which we won't go through. But that's some of the key aspects of the differences. Okay, so they must pay the HST, the supplier, but can recover this tax from the government. By law, the tax payable as a result of the company's sales and the tax recoverable must be accumulated. So it doesn't matter whether you're GST or PST or an HST system, you essentially are required to collect that money. So how do we do the accounting for it? So first of all, this should be fairly straightforward if you understand the GST system, because it's very much the same. HST payable, that's for you accumulating the amounts charged to customers during the reporting period. HST recoverable accumulates the HST paid by the business. So that's the amount they'll minus off from the amount that they owe the government. Both HST accounts appear in the liabilities section of the ledger, but the recoverable is a contra liability account. You would normally debit it, except when you're doing your remittance, then you would be crediting. Okay? And to determine the net HST to be remitted to the federal government. So here we have, in this particular case, we are custodial services. That's our company. This is HST in the book of the seller. We have HST at 13% right here. That is the amount of HST we're owing. And you can see what happens with this transaction. We debit accounts receivable, okay, because the people owe us. We sent them an invoice. It's an accounts receivable. Why? Net 30 days. That tells us right away. It's an invoice. People owe us money. Sales are $1,500. HST payable $225. Okay, so credit to HST payable. It's a liability. Now we have this, HST in the book of the purchaser. So in this particular case, the office supplies are $600. Okay. The HST recoverable is $90. And in this case, we owe the full amount of $690. Remember, with the GST PST system, we would have had to add the amount of the PST into the cost. So it would have been 600 and something, 650, 648, whatever the percentage we're using, and that would have been added in as a cost. So it makes things more expensive under the PST system for businesses. So remitting HST is the same as remitting for GST. You can even see up at the top, it says GST HST return. Okay, you're still putting in the amount that you collected minus the amount of how much you paid out. This is the amount that you then have to send to the government. If your refunds are higher than your sales, which can happen, you may not collect a lot, but maybe you have to pay a lot out. Certain businesses that happen, then you're entitled to a refund as well. So in this particular case, to do a remittance at the end, you do the opposite. So we're debiting HST payable, we're crediting HST recoverable to bring those accounts to zero. How do we come up with those amounts? Well, those are the amounts we got from the account. We should have looked at the HST payable, should have showed a credit balance of $2,309.65. So to get that to zero, I have to do the opposite, which is debiting for the exact same amount. Okay? And in this case, we're crediting bank. If we were getting a refund where recoverable is higher than payable, then bank would essentially be a debit. This is how it looks on the balance sheet. So what do you have in this case? HST payable less HST recoverable, and you have the amounts that go in there. And so with that, that is the end of 6.3 for HST. So remember, with HST and GST and PST, don't put them together. There is no way that you're ever going to have an HST payable and a GST payable and a PST payable in the same transaction. You're either going to be using the HST system, so HST payable, and then on the other side, GST and PST. You're either using one or the other. Don't mix them up together. Okay? And with that, that is the end of 6.3 HST.